is Mike Hackley, and I am going to be giving a Netflix stock evaluation. Whenever we're evaluating stock, the first place to start is by looking at the overall price movement or what has been the typical stock chart that you see here in front of you. You can see that the stock price started down around zero and has gone through a lot of ups and downs, and we are now hovering right around the $230 mark. Part of being able to assess the movement of stock is to be able to use something called the Bollinger Bands. Bollinger Bands allow you to set an upper and lower expected limit of the stock based on the moving average. So you take the moving average of the stock. In this case, this is a 20 period moving average. I'm going back 20 days, and then you add plus two standard deviations for the upper Bollinger Band, and then you look at minus two standard deviations for the lower Bollinger Band, and then the green line in the middle shows the actual price. And as you can see, there are very few areas in which there was a time where the actual price dropped below, substantially below, or substantially above the limits of the Bollinger Bands, proving that this is yet a very effective tool for predicting price movement. Since the standard deviation is such an important part of establishing the Bollinger Band, I wanted to be able to look at the standard deviation and its relationship to the actual price of the stock itself. And as you can see, when there are increased levels of standard deviation, there's also going to be sharp movements of the stock, whether that's going to be up or down, but sharp movements in standard deviation do seem to correlate with there being a change in stock price. Another way that stock price is affected is when there are large investors involved in the actual buying and selling of the stock. Here we wanted to look for any whale activity, or what they consider very large investors, and a way to do that is to show large volume moves beyond what would be considered the average. So in orange you see that average um, volume of a typical day. However, you can see in the blue there are definitely areas where there are much larger volume. So those areas typically indicate whale activity. When whales are making their buying and selling decisions, oftentimes they look at historic data, and one of the things they will use are areas of support and resistance. So areas of support and resistance allow you to see where the stock typically does not like to go above or below. So when the stock is struggling to go above a particular area, we call that an area of resistance. Whenever the stock is looking and having difficulty falling below a particular price point, we call that an area of support. And as you can see, typically um, every October there is an area of support and resistance that allows investors to be able to see the typical movement of the stock. And as you can see, the Netflix stock behaves very well in between the areas of support and resistance, especially respecting that 209 and that 395 line. Looking at the Bollinger Bands from a much shorter time period, this is the Bollinger Band activity over the past 12 months. And as you can see, once again, the stock price is beginning to bounce off the bottom area of the Bollinger Band, indicating that once again, price typically has an opportunity to reverse and go back to the upside. But rather than make that by itself, I wanted to look at different areas of correlation. So here you can see that there's a strong correlation between the trailing 12 months net earnings per share, and then also the quarterly revenue and the stock price, and then the quarterly revenue and the trailing 12 months net earnings per share. Looking for further correlation, we looked at the earnings per share versus the stock price, and there's clearly an indication that as the stock price increases, so does the earnings per share, and vice versa. The quarterly revenue and the stock price are so strong that I was able to actually plot the slope of the line. And here you can see this regression analysis gave us everything that we needed to be able to show that there is a very strong correlation between the quarterly revenue and the stock price. Here we wanted to plot both the earnings per share as well as the revenue by the stock price as well. And as you can see, both of these lines tend to move in the very similar direction. The peaks and valleys look very, very similar. Again, this just shows very strong correlation between both of these factors and driving the actual price of the stock. Here I wanted to show the actual revenue versus the price of the stock, and as you can see, the lines are very similar, especially in the early on time. The only time there really becomes much of a difference is right around the third quarter of 2021, and that is because that is the first time Netflix has seen a strategic or a significant drop in the number of subscribers, and that's what caused the downward slide of the stock. In spite of the stock taking a significant landslide over the past month or two, the revenue trajectory and forecast for Netflix remains very strong and moving in the positive direction. Likewise, the stock now is looking to have a rebound based on the forecasted numbers, based on there being a strong correlation between the revenue and the stock price, as well as the trailing 12 months earnings per share and the stock price, both of which are much higher than normal. This gives a clear indication that the Netflix stock is a buy, and I would recommend buying the Netflix stock. I definitely hope that this evaluation has been helpful. Again, my name is Mike Hackley.